Hello everyone and welcome back to Explain the Charts, your go-to channel for detailed market analysis. Today is October 13th, 2025, and we are diving deep into Meta platforms, ticker symbol Meta. There is a fascinating tug-of-war happening between bullish and bearish sentiment right now, so we'll start by breaking down the latest news before we get into the charts. On the bullish side, the narrative is overwhelmingly positive, driven by Meta's aggressive and successful pivot into artificial intelligence. The company reported stellar Q2 2025 metrics back on July 30th, with a 22% year-over-year revenue increase, crushing estimates. This was fueled by a significant rise in ad impressions and average price per ad, suggesting their AI-driven advertising model is firing on all cylinders. Looking ahead, management's guidance for Q3 was also very strong, and there's even a buy-side whisper that this guidance might be conservative, setting up for another potential earnings beat on October 29th. Reflecting this optimism, analysts are raising their price targets, with Citi setting a target of $915 and the highest on the street reaching a staggering $1,100. We're also seeing major institutional players like Norges Bank increasing their holdings, which is a strong vote of confidence. However, it's not all clear skies for Meta. On the bearish side, there are growing concerns about competition, particularly from OpenAI's new video generation model, Sora 2. The fear is that compelling new AI applications could divert user attention away from Meta's platforms, which is the lifeblood of their business. Furthermore, some technical analysts are sounding the alarm. A recent bar chart article highlighted weakening moving averages and warned that a break of key support could see the stock tumble towards its 2025 low of $500. They also noted that historically, October is Meta's worst performing month, and its valuation at 11 times sales is a concern for some. This creates a very interesting setup as we head into the charts. Now, let's pull up the daily chart to see how this news correlates with the price action. Looking at the bigger picture, Meta has been on a phenomenal run throughout 2025. We can see the explosive gap up at the end of July, which was a direct result of that blockbuster Q2 earnings report. This move propelled the stock to its all-time high of $796.25 in mid-August. Since hitting that peak, the stock has entered a necessary consolidation and correction phase. The price has pulled back and has been trading in a wide range for the last couple of months. The most critical level of support to watch on this daily time frame is right around the $690 to $700 area. This level represents the bottom of the recent sell-off and, more importantly, it's near the top of that massive earnings gap from July. A definitive break below this level would be technically very significant and would validate some of the bearish concerns we discussed. Let's zoom in on the price action since that August peak to get a clearer view of the current trading range. Here we can clearly see the rejection from the all-time high near $796. After that, the stock established a downward channel, culminating in the sharp drop in early October, where it found support right at that crucial $690 mark. Since then, we've seen a bounce, and the price is currently fighting to reclaim higher ground. Resistance for this current range appears to be forming around the $750 to $760 zone. For the bulls to regain control, they need to push price decisively above this area. Until then, we are essentially range-bound between roughly $700 on the low end and $760 on the high end. Now, let's switch to the 1-hour chart to analyze the short-term battle more closely. On this time frame, we can see the anatomy of the early October sell-off in more detail. Notice the high volume on the move down, indicating strong selling pressure at the time. However, when the price hit that $690 to $700 zone, we saw buyers step in aggressively, creating a solid base. The subsequent rally has been choppy, indicating uncertainty in the market leading up to the earnings report. The price is currently consolidating just below the $710 level. Short-term traders should watch for a break above the recent highs around $735 to signal a potential retest of the $750 resistance. Conversely, A break below the recent lows around $704 would signal weakness and a likely retest of the major $690 support. This hourly chart really shows the market is in a state of equilibrium, waiting for a catalyst. For an even closer look at today's action, let's briefly look at the 15-minute chart. Here we can see the intraday swings and the fight for control. In the most recent sessions, price action has been tight, oscillating in a narrow range. This suggests traders are hesitant to place large directional bets right now. Volume has also been relatively subdued, which is typical during a consolidation phase before a major news event like earnings. This micro view confirms that the market is waiting for new information before making its next significant move. Okay, let's go back to the daily chart to recap and bring it all together. The situation with Meta stock is incredibly compelling, with strong fundamental arguments on both sides. The key price levels to watch are crystal clear. Major resistance is at the all-time high of $796, with intermediate resistance around $750 to $760. The most critical line in the sand for support is the $690 to $700 zone. So, what are the likely scenarios? First, the bullish scenario, which I would give a 60% probability if the upcoming earnings on October 29th are strong. In this case, we would expect the price to hold above $700, break through the $760 resistance, and make a new run towards the all-time high and potentially beyond, towards those higher analyst targets. A strong outlook on AI-driven ad revenue would be the primary catalyst for this. Second, the bearish scenario, which has about a 40% probability. This would be triggered by a weak earnings report or poor forward guidance. If the price breaks and closes below $690 on high volume, it could signal a much deeper correction. The first target would be filling the gap down towards the low $600s, and if market-wide panic sets in, that bearish analyst target of $500 comes into play as a long-term possibility. Finally, a neutral, sideways scenario is highly likely in the 2 weeks leading up to the earnings report, as the market awaits that crucial data. Look for the price to remain choppy and contained between $700 and $750. The upcoming earnings call is the single most important event on the horizon for Meta, and its outcome will likely dictate the trend for the remainder of the year. Thank you for watching this analysis on Explain the Charts. Please remember, this video is for informational and educational purposes only and is not financial advice. Always conduct your own research and consult with a professional before making any investment decisions. We'll see you in the next one.